The following is a presentation of TFNN. The TFNN Bull Bear Trading Hour. Every trading day, live at 10 a.m. Eastern. Call now, toll free at 877-927-6648 or internationally at 727-873-7618. The TFNN Bull Bear Trading Hour. Now, Tom and Tommy O'Brien.
Welcome, folks. Appreciate you growling and prowling with us out here. We have the Dow Industrials up 175, Nasdaq up 72, S&P's up 21, gold flat, $15.55 an ounce. We get silver up 23 cents, $19.47 an ounce. Light sweet crude up $1.72. Get some action out there, man.
It was change a day, down $2 yesterday, up $2 today. Wow. We get oil numbers at 10:30. Lots of action.
55.66 notes and bonds. You get the 10-year down 2 ticks, 132.01. 30-year off 16 at 165.13. And King Dollar down 359 ticks, trading 98.590. Now, King Dollar, folks, the bottom line got back inside the 98.770.
Action there as well in oil, right? What was the high yesterday? 99.350, something like that. We're back down at 98.580.
And we've been going through this since last October. Specifically what I mean, folks, is that as it gets higher, the volume dies in the vine. It gets lower, and the volume dies in the vine. So the range is still 98, 99 to 94.
Everything's dying on that vine, I guess.
Dying on the vine, man. You get the euro. The euro is at 110. The yen is at 106.23, and the pound is at 121 to 1 US dollar. Let's go over to Mr. Kevin Heeks at TD Ameritrade Thinkorswim, as we do each Tuesday, Wednesday, and Thursday. And don't forget, folks, every trading day right here, 11 to 12 Eastern Standard Time. Outstanding show. If you want to understand option strategies, futures, great program. If you haven't test driven yet the Thinkorswim platform, real easy to do. As you're a TFNN, just hit that TD Ameritrade banner, bring it up. They'll allow you to trade with paper money. You can follow Kevin and his team every trading day. Kevin Heeks, what's going on?
Good morning, Tom. Good morning, Tommy. Great to be back with you guys. How's everything going?
Good morning, Kevin.
It's going good. We, the poor people in the Bahamas, that's for sure.
Pictures,
but
man.
we missed the bullet here. There's no doubt, so.
It's amazing how fortunate the state of Florida was, for even though you guys still got rain and it's still not great weather, it's a fraction of what the Bahamas got, and still what may hit in terms of rain and water to hit, further south along the East Coast.
You almost don't realize that the storm's still looming out there because it's 50 to 75 miles off the coast. We haven't gotten the impact like you're talking about. And, man, when you see the visuals, it's just sitting out there, and it is. And the coast of the U.S., man, it veers into it. And so the Carolinas out there, be safe, because if you haven't seen the pictures, folks, in the Bahamas, just complete devastation.
1 mile an hour is moving. Now it's moving 5, I guess, but that's pretty intense.
It is.
No doubt.
It is.
So, last night, Kevin, bottom line, I guess, it's kind of interesting how our futures kind of popped on, just the executive over in Hong Kong, basically.
Sure.
Yeah, exactly.
Yeah, no more extradition as of now, I would say, right? Yeah.
There's a lot of news on this market, and from a trading perspective, how do we deal with it, right? And really, there's a lot of people waking up with some whiplash this morning after yesterday's action and then waking up to today's action. And it's so important in these overnight markets to make sure you're watching what these overnight markets do and the news breaking from those overnight markets. Because those, if you look, the overnight futures, China's up big. And what does that lead to? Ben Lichtenstein and I were talking, Tom, you're on that show with Ben often, about everything that involves China moved, right? Like just things like copper, right? And grains and everything involved with China moved. So China's economy, even though we'd like it to not affect our economy so incredibly, it still does. And all you have to do is look at some of the commodities that move. Because why? Because China's the variable in all these commodities. They are the if their demand increases, the demand for all these commodities will go up.
No doubt. Kevin, as you're speaking, we brought up the Hang Seng, right?
Yeah.
Every individual stock, now, all the folks watching Tiger TV, there's only one equity that was down out of every individual stock in the Hang Seng Index.
And the one that's down, what's it, marginal? It's down 10 cents of a $16.14, and then you have mammoth numbers on the upsides.
Pretty impressive, man.
And you know, so many people in the U.S. market, guys, have prepared for the impending doom of this market, right? Everyone seems to be getting ready for, well, how many people do you think are preparing for a recovery? What if China starts to recover?
Right.
What if the Eurozone starts to recover and starts to see better numbers? How many people are prepared for that? Because if you look at the chart from really last October to now, we're flat.
Yes.
Over basically a year, almost a full year, we're flat. So the people that think this market doesn't have another leg up don't understand that we basically had a big leg down, and now we're flat for the last 12 months.
Right. And
you know, no more yield inversion.
No, that's right. There's no more yield inversion. And what is intriguing is that, you know, like with our own dollar index, so the pound and the euro have been getting smoked forever. And I think we're going to know one way or the other, either in 30 days, well, in 45 days, or if they get another 90 days on it, right? I mean, this thing's coming down, man. And what's so intriguing, man, is that the euro seems to be almost weaker, you know, has been weaker than the pound even. But they're both, you know, been down for a long period of time. So it's not going to take much for them to get going.
And for people that are wondering why is the U.S. dollar high and staying high, I really think a big fraction of that is Brexit uncertainty that has been lingering now for, what, 18 months, 2 years? Right?
So
I mean,
long,
it seems like it's been forever.
Right?
Brexit's been out there. And if they get this right, which there's no, there's no real case that they will, or it might not be lumpy, but there's a lot of speculation on that we don't know. The pound and the euro could really rally out of this, which would, in fact, lower our U.S. dollar for sure.
I just put up the euro for you, right? So we just went from 125, folks, to 110 in basically 2 years. And guess what? There was no bounces here.
Really, it's a year and a half. It is. It's crazy, man. So, and the market hates uncertainty no matter anything. And that's the one thing I think we all could agree on, that nobody knows what's going to happen, you know? So the uncertainty factor in the euro, in the pound especially, once that gets wiped away, at least they can have a horizon that, because even if it's a hard Brexit, well, then they got to make all these trade deals. When it'll happen, you know, this whole deal, when's it going to get pushed back? It hurts that market continually.
You know what's intriguing? You know, people talk about you get a stock rotation, right? It's almost like when I'm looking at this on a longer term basis, we just might have a currency rotation now. I mean, it's been going down for so long. It's like, okay, if they start getting their act together, that starts moving up a little. We start backing down. We back down. That means big companies will sell more goods.
Yeah, and that's the trade deal. There's a lot of uncertainty. If everything just got settled, no matter what it is, you can start leading towards, you know, some type of certainty.
Gotta love it. Oof. Kevin, you have a great day, safe day, and of course we look forward to the program. And folks, when we're talking defined risk, you better have defined risk, okay? You blink and the S&Ps are either up or down 25 points. You gotta love it. Kevin, have a great one, a safe one.
Thanks for having me on, guys.
Thank you, Kevin.
Stay right there, folks. Tommy and I come right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, TAS understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the TAS Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. Dow is up 152. NASDAQ is up 58. S&Ps are up 17. Let's go. I want to look at this silver contract. So silver yesterday
doesn't stop, man.
It was a monster.
We're gonna get $20 silver.
And look at the volume, 98,000 contracts already.
I still got some ounces of silver buried away, man, that you gave me when I was a young kid, right? I'm riding the volatility. Totally. I do. I got it, totally.
This is impressive, man.
It is.
Silver's doing an impressive run here. Now, platinum, this is impressive, too. Check this out.
Definitely.
So, this finally, look at this, man. This is, so 6 days ago, you were at 867. $1.20, and this, it's about time, man.
Yeah, it's about 15% in, what'd you say, 6 days? Yeah.
PL1. Let me see. This is going to be.
You usually don't get that type of pop without without some type of massive underlying story. And yeah, there's story, right? There's yield inversion, but we've known about these yield deals. We've known about these deals. You know,
this is. I don't know what this is, but I know they're finally buying it. That's the bottom line. And you know what? Guess what? It has a long way to go to get higher than gold again.
Yeah.
You know, and it's been years since it's been inverted.
Sure.
And then we're going to have oil numbers coming up, right?
We sure are, man. So we can take a look at it, right? So it's 10:19 right now. Let's jump over and see what we got going on. So we'll pull up, and it is interesting, man, this market. Check out that running crude this morning, right? So 6 a.m., we're trading 54.16. You trade up to 55.70, $1.50 over the span of about 4 hours. And what's interesting is that, man, you pull up yesterday's action. We made it to a low of 52.85.
Yeah.
You climb basically $3 in the span of 24 hours. You go from 10 a.m. yesterday, 52.85 to 55.71. We missed it by like 15 pennies for a $3 run, because quite an acceleration to the downside, quite a rise up. And we're going to get those numbers coming in at 10:30. So let's just see what kind of trade setups, what kind of volatility are they pricing into this market. I'm expecting they're going to put some
have some volatility in
man.
there.
They sure should. So we'll jump into our crude spreads. We're going to start it off with 11 a.m. So again, we have the underlying contract trading at 55, 56. Ideally, we're looking for exposure to the upside and the downside, maybe setting up a volatility trade here. So looks like the 11 a.m. contracts, we could have volatility from 55.75, could be our price point. Not bad. We're only about 15 pennies away. So let's just set this one up real quickly. Here would be your bullish spread. You start with bullish potential from 55.75, all right? Now would be about 15 pennies out of the money, right? So you're only paying premium on the bullish side. You're paying $7. Now again, if you're bullish, heck of a trade, man. You risk $7. Now you start 15 pennies out of the money, right? You got to trade up about 22 pennies before you break even. Not a bad trade when you look at, we just said it just moved $3 in 24 hours before the inventory numbers even come out. And then on the flip side, you would have exposure on the bearish side of things from 55.75. You have the same $1.50 exposure to the downside. Now in this one, you're paying the 15 cents of intrinsic value. Then you're adding the 7 or 8 pennies in premium. And so you're looking at about 22. Not bad though, 29 pennies, $29 for both sides of the contract. Now that's for your 11 a.m.s. Let's jump and see how we line up on noon and how these price points line up. So on noon, same exact price points, all right? This is gonna be nice because all we're doing is we're adding an hour. Same exact price points. On the bullish side, we're now paying, yep, this is right, we're now paying 15. Now we're only paying 7 or 8. Now this has ticked up about 2 pennies since that time, okay? But we're paying 15 for the out of the money because again, you have exposure from 55.75, contracts trading at 55.62. And then on the bearish side, this one again, the bearish is going to be the more expensive because you already have 13 pennies of intrinsic value. You're going to be selling it 27, so you're looking at 42. Okay, now that gives you until noon. And again, you're paying $42. You need 42 cents of movement away from, I like to call it the pivot point, you know, where you have an upward and downward exposure from this 55.75. Your max loss is 55.75 because you're making money when you go upward from that level on the bullish one. You're making money when you go downward on the bearish one. You're losing everything if it happens to expire right at that penny, 55.75.
Right.
And let's see if you want a little bit, because man, I might want a little bit today the way this contract has moved. Why don't you, let's see what the 230 is going to cost you, right? Now, unfortunately, not a good trade if you're looking for volatility on the 230 daily, and this is because oil just moved $3,
so
right? So the ones that set last night, they don't have price points because they're set lower because oil was trading lower. But nonetheless, so we were looking at about $29 to $30 for the 11 a.m. We're looking at about 42 for the noon, and again, the price point to watch, 55.75. And as we say that, though, it's inching up. We're now at 55.65. And let's just see as this inches real quick before we jump back, because the 11s are going to change here. This is now inched up. Because it's inched up, the bullish one's now costing you 10 bucks because you're much closer to where you're going to start achieving actual value. And the bearish one on the flip side has dropped. So you're looking at 26. It was 27 we pulled up. Pretty comparable, right? They're just shifting from one contract to the other.
And then let's look at this. So
not a bad trade. And again, keeping in mind, we set up both sides for those, you know, biased traders out there that are bullish or bearish. I like those trades if you really have a directional opinion in this market.
Right. So look at this. And, you know, yesterday you get down with monster volume, right? 974,000. You're only up with 339.
Yeah.
You know, so this is going to be really intriguing watching how this does come out. So we had the, I didn't know what those numbers were last night. The
API?
API numbers, yeah.
Let's pull it up. Let's see. A lot of headlines in the news for crude this morning, right?
Oh, did I get them yet? No.
You might have. It's 9:03. I'm just not sure where.
What time at night?
Yeah, right. Yeah, like we said, lots of headlines, man. Because yesterday, playing into the kind of the decline of crude, right, was the. We'll have to put up exactly, but it was the first trading day of September when new tariffs were put in place, and whether it was the oil trade, the oil tariffs or not, you have economic tariffs that are potentially hurting economic growth.
And look at the dollar. The dollar's moving.
Oh boy, we're down 500 plus ticks.
Something just happened here again.
It sure did.
You know, just went from 98,610 to 98,440, and They threw some volume at it. 17,000 contracts.
Pull up Twitter real quick. No,
1,700.
I joke. I joke, but I joke half-wittedly because we all know it might be the truth.
Yeah, there's no doubt. We take a look at some of the higher volume. Well, let's go Starbucks, SBUX. So
Good,
Starbucks.
The outlook not so rosy.
Yeah, look at that. It's only down $3 too.
Yeah.
Yeah. Let's see what this.
They haven't had a day like this in a while, though.
No, they haven't.
There you go. Most since January. His profit outlook disappoints. So Starbucks slumping the most intraday in more than 7 months after the coffee chain signaled that its profit growth will start to slow. So they spooked investors with a presentation that indicated its recent rate of 10% or more profit expansion is not sustainable. Starbucks said the effect of the tax benefit of 2019 will end in its next fiscal year, which starts in October, and the company is going to reduce share buybacks. Yeah, not good.
You talk about expectations, though. They're setting everyone up for a higher price.
Yeah.
I mean, they're saying, hey, we're going to go. Look, we can't do 10% all the time, which is smart.
Right. You gotta, because it's going to come to roost eventually. So.
Stay right there, folks. Tommy and I come right back with those oil numbers.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow's up 164, Nasdaq's up 63, S&P's up 19, and guess what, folks?
No crude oil today.
It was a holiday. That's right.
That's right.
Tomorrow.
Summer's over. Labor Day's passed.
Yeah.
And every time they get that Monday holiday, they push back the crude. So we'll get crude inventories tomorrow at 11 a.m. Eastern time. Interesting thing, we still get natural gas at 10:30. So we got two numbers coming up tomorrow for that commodity sector.
Let's go take a look at the Dow Industrials, so the strength versus the weak. Actually, I'm going to look at the S&P first, because my take is that this thing's not going to hold. And this is like to me, this was a classic bounce on, there's no doubt the executive over there pulled one of the bills that they were upset about.
The biggest one, to be fair, right? The extradition bill.
Oh, yeah.
But it might be too little too late.
Right, and it's... I like that the market bounced. Let's put it that way. But
we'll get to the essentials.
We'll see if this market can hold, because that bar at 10 past 10, that has volume on it, so that wants to get tested again. So that's 29.21.
It was getting dicey over there. Just to bring it back, I mean, it's a scary notion, right? I mean, China has had a history, I think most of us or all of us are aware of, in terms of, dissidents and clamping down. And so the worry is
Tiananmen Square.
Does that escalate, right? So it's good to see maybe China being aware that they don't want that to happen. But now it comes to the point where are the protesters going to slow down just to bring things? Because then if they don't, this is right. The rhetoric. China now may feel like they have a ground to stand on to clamp down, because they say we've met all their demands. We've pulled. Yeah. And so now they're not fighting for anything. They're, fighting against China. And so are they building an argument to clamp down? I'm just providing those points as you, because that's still a threat out there that is scary for all.
Well, the thing that's so intriguing in general is that they only have one country, two laws until 2047 anyway. So it's like, that's kind of a strange deal.
And that's why I think you might not see the protests stop.
Yeah, I agree.
More than, and they've seen the writing on the wall.
They want to try to change that law.
They've seen what's coming down the line in 2047. And if you have young kids,
and that's only 28 years away.
Right.
That's nothing.
It is nothing.
Yeah, and
that's what China sees too. So saying, maybe we push too hard, maybe we got to pull it back. But now the question is, a little too late? And then if the protests continue, will it be an escalation? Because you'll see probably Chinese political executives saying, what do we do now? We did everything you want. Now you're just out there campaigning against China, and we can't have that. And they might feel more secure in their clampdown that they've acquiesced to some of those demands.
Well, I heard there's a guy on that he wrote the book 20 years ago, something about Hong Kong, the rise of Hong Kong, and it was really pretty cool what he was saying, meaning that they were asking about, well, where's the stand? And he was talking about that President Xi, the last 6 years, has been hammering Hong Kong and been very aggressive.
Sure. That's what dictators do.
And what he's done, and this is where the push really started coming in, is that they started introducing books in grammar school and in high school. And guess what, though? The other side of it fought back and said, no, we're not taking these books.
Okay.
Because, of course, what happens, folks, when you get kids young, that's where it's at.
Yeah.
You're reading your history books, what history is. It's like...
Yeah. The winners decide history, right?
Do,
when you read about history, you're reading about the version of history written by those that won the wars, not the version of history by those that lost the wars.
There's no doubt.
Yeah.
There's no doubt.
So how about, you see this this morning? So Porsche coming out with a new electric Taycan Turbo aimed right at Tesla. Seems like quite a vehicle here. So you got a four-door sedan, all-electric vehicle from the Germany-based automaker. And some cool stats here. So 670 horsepower, a powerhouse, right? So this is where you really get into. You got, and we've talked about it many times.
That's a powerhouse.
Talked about it many times. Now, this is a premium vehicle, but this is going to be competing with some of the super high-end Teslas, of course, okay? The range, 279 miles, which is less than that of the latest Model S, less powerful and and likely less expensive than the all-wheel variant drive cars will follow later this year. But I saw one stat that it can charge and maybe they'll have it in here for 60 miles about in 4 minutes.
Okay.
So that's one of the things,
That's a
right?
big
It's
deal.
like, do I have to sit there and charge forever? And all Porsche dealerships are going to have charging stations. So you have this thing, Tesla can't do that. They don't have dealerships, okay? So right off the bat, you're going to have Porsche dealerships. You pull up there, you charge for 4 minutes, and you got 60 plus miles. 60 plus miles, that's probably the most people what you're traveling in a day. So it represents the biggest investment Porsche's ever made in a new model, incorporating funds from $6.6 billion the company has devoted to make electric vehicles at a new factory in Stuttgart.
And you know, it's interesting. It's just saying, I'm wondering, I mean, Porsche is part of Volkswagen, right? I think.
I believe so,
I mean,
but I'm not sure.
If they have them at all the Volkswagen dealerships, it's going to be unbelievable.
No, that's not what they stated. Okay, that's not what they stated, though. I've been listening to the story. They specifically said the. See, here we go. It benefits from the additional $2 billion the parent company Volkswagen spent to erect the Electrify American program, a VW subsidiary that owns and maintains a network to charge electric vehicles. Roughly $800 million of that sum will be used to build an electric network in California alone.
Yeah, well, they'll sell a lot of those cars in California.
Yeah. Yes, right.
That's a car state. Look at that car.
Yeah, right. So 150,000, man. That's a house. You better have a sleek-looking vehicle.
Oh, that's not that 150. That's a Michelin
that's a concept car. No wonder it looks. Yeah,
it's probably $1 million.
So it has. So this is though the Taycan Turbo talking about. It has 2 electric motors, one at the front, one at the rear. It allows it to go from 0 to 60 in 2.6, so this is the Turbo S. The Turbo can do it in 3 seconds. 3 seconds, both times equal, but do not beat the time the Tesla models. So they're right. They know who they're competing with. Excuse me. Don't let the Turbo name fool you. It's not turbocharged. Porsche's using the name Turbo for branding only. Well, yeah. I mean, if you're going off the names of the vehicles, folks, you know. Yeah. So lots of good stuff, but pretty interesting. I was looking at Tesla maybe to see they're not taking really a hit on this morning, and I think the reason why they're not is because you better know these are coming down the pipeline, okay? This is not a surprise that you're going to have the likes of VW, especially VW. They were one of the first companies that came forward and say that they're going to have a fleet, if not their entire fleet, by like 2022, 2024. But we're starting to see it, man.
Let's go take a look at the inside the NDX and see what we have here. So NetEase up 5.8%. That's a Chinese company. You got Western Digital up 5.4%. Alexion Pharmaceutical 4.8%, and Micron. So you get the chips up.
Definitely.
And
how about? Sorry, keep going. No, jump over them. I was going to say Alta down again today, 1.6%.
Let's see. So NetEase develops application service other internet technologies.
There you go. So they're getting a China pop.
Yeah. And then if we go on the red side, you get Starbucks down 3%, Microchip Technology down 1.5%, Ulta down 1.4%.
Yep.
Yeah, Ulta's that is a major hit.
That's the thing I was going to say. Is that a low? What is that low from yesterday? 231.02. Okay. Now down more than $100 though from that level. It sticks out. 337 was where they were.
3 days.
Yeah.
Stay right there, folks. We got our man, Mr. Teddy Kegstack, coming back with us. We are going to be talking currencies, big time.
That's right.
If you're in the CD market and looking for a secure investment, the Tiger First Mortgage Program may work for you. The security for these first mortgages are building lots in the Tax Opportunity Zone in St. Petersburg, Florida. The Tax Act of 2018 set up tax-free zones across the country where you can build and hold for 10 years and pay no tax on the profits, which makes these lots valuable. The investment is anywhere from $30,000 to $75,000. The interest paid is 7% yearly, paid on a monthly basis. According to Bankrate.com, the best rate for a 4-year CD in the country as of February 20th is 3.1%. A $50,000 investment at a normal 4-year CD rate of 3.1% would give you income of $1,550 per year or $6,200 over the 4-year period. That same $50,000 investment in the Tiger First Mortgage Program would give you $3,500 per year or $14,000 over the 4 years. Which would you prefer, $6,200 or $14,000 of interest on your investment? If you would like more information about the Tiger First Mortgage Program, you can call me at 877-518-9190. That's 877-518-9190.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow up 156, NASDAQ up 61, S&P's up 17.5. Let's go over to our man, Mr. Teddy Cakestad, as we do each and every Wednesday. It's Wednesday, right? At 40 past the hour. And listen, folks, you can check out Teddy every trading day at forex-trading-unlocked.com. It's forex-trading-unlocked.com. Teddy Cakestad, what's going on, brother?
I'm doing pretty good in this short holiday week we got going on.
Yes, and we got action in these currencies, man.
We do. We have some sell signals and some buy signals, and very interesting position with the U.S. dollar shaping up today.
Yeah, you know, that thing it got over that 90, well, the index got over that 98,770, had no juice, and then just gave it up again. So that mark there has been there for so long, man. You know. The euro and the pound. Talk to me about the euro and the pound.
Okay, well, the euro and the pound yesterday both stamped a new lower move low, but they came off it pretty nicely, and they settled positive, and today they have a nice reaction. There's a lot of economic numbers that are coming out this week for the pound, the euro, the U.S. dollar, and the yen. PMI is one of the big numbers for Germany, for the EU, for England, for the UK. So there's a lot of major economic numbers that came out today, tomorrow, and also coming into Friday that are probably going to stir things up. The interesting thing is that everything's been basically analyzed to the point to where everyone's looking downward at all these numbers, and now they're actually beating expectations, and some of them are actually beating them pretty good. So I think that you're going to see a little follow through. We got a little buy signal, kind of a sell signal for the dollar going on for the next couple days. But Friday is going to be the very big crucial day, I think, for these currencies, for the euro and the pound. And if you look up the charts, you can see how they spiked, and right now the euro is pretty strong today.
Yeah, no, listen, it's impressive. When we were talking to Kevin Hinks earlier in the day here, you know, they've been down for so long. It's like, you know, you can, you know, we'll see where it goes, but you can certainly think that, you know, you don't go down forever, you don't go up forever, you know.
Sure.
I mean, so.
Well, there's also another positive reinforcement. If you look at the U.S. dollar Swiss, they also spiked high yesterday, and there's trading pretty low. I think they were on their offer when I first logged in to you guys. So there's a sell signal there. So you have weakness in the dollar against the Swiss. Right now, you have weakness in the dollar against the pound and the euro. This is just as a reaction. Yesterday, I think, was more of a reaction to the holiday markets and opening up in the U.S.
Yes.
Follow through today. So we had very big numbers that came out today throughout Asia and Europe, and also we have big ones coming out over the next couple of days. So I think we have a little bit of a little change in trend for the dollar. It's also manifesting in the U.S. dollar Canada. That's turning around. Ironically, the one currency that's showing strength, where the dollar is showing strength, is in the Japanese yen. So, and that's going to be, I think that's ready for a nice little play to the upside, a little contrarian trade for the trend.
Yeah, it's so intriguing, man. Like, we know that Brexit's getting closer, right? And the real kicker is going to be, like, sometimes when I look at the pound or the yen, Teddy, it's like the euro. The euro seems to almost take worse beating than the pound.
Right. Well, the euro-pound cross actually is not doing so well. That's riding support right now. So the pound, I think, is getting a lift. Remember, we've been talking for the past couple months about the whole Brexit deadlines. The first one was September 1st. I mean, we just came off of a holiday weekend out in the UK. Boris was pretty busy over the weekend.
Yeah.
Doing this, that. I mean, first, second, third, now we're at September 4th. I mean, each day going to October 31st. It's going to be an interesting little fight going on, I think.
Yes.
Yeah, it's definitely a food fight.
It's headlines every few hours coming over there.
I mean, because, you know, like this morning, they start talking about the aspect that, okay, we might get another referendum vote, too.
Yes.
You know?
Right.
And, boy, that'd be something else.
It seems like it fits right in line.
I don't think it's going to happen, though. I think Boris he's really hardlining things. Remember we talked about last week about the potential suspension of Parliament?
Yes.
We may see that happen. I don't think that this guy's not messing around. He's pretty much shown that he's not just a petulant kid stamping his feet. Like, he says what he does what he says. So I think that the more they agitate him, the more likely he is going to prorogue, if you will.
Yeah.
Yeah, no, that's not. You can see it. I mean, he was clear as a bell.
He's prime minister,
where he's going,
and he's going to use every kind of.
And you know, their Supreme Court today ruled that it was legal what he did.
Yes.
You know, with the Parliament there.
Yes.
So.
Yes. Right. So, and I think that's where you look at the Swiss, where I think that the market actually is absorbing, or big money is absorbing this whole situation, the Brexit thing, where we might see some strength in the pound now. And now, if we have strength in the pound, even if the euro is weak, the pound is one of the biggest currencies out there. That's going to hit the dollar index. And if the Swiss continues to break, you know, now is it going to be a big bear? Well, we know the U.S. dollar Swiss has been a bear for quite some time. So if this reinforces it, you know, that starts to see the dollar index should take a turn for a little bit, which it's due for a correction. This is, I'm not calling for a bearish, you know, change in the dollar, but right now we're in a very good week or two phase where we could see a nice corrective move off of these new highs and lows that were set yesterday in these multiple crosses.
Boy, I just put the, I can see why people put their money into the, I guess, the Swiss franc, or even the dollar, because when you put this up, it's like, this has been pretty stable for a long period of time, right? I mean, I'm bringing it back to 2011, and the top of that is like 103, and the bottom is like 93. Not bad.
Okay.
Yeah.
And then here's another fade fact for you. I did a lot of reading about the UK and Brexit and stuff like that from different papers around the US and around the globe. Everyone is, now, when we talk about parity, what do we think of? We always think about the US dollar Swiss trade, right? Usually if you hear the word parity, that's the first thing that comes to mind.
Okay.
There's always talk about parity in the pound dollar. I really don't think there's any likelihood of parity in the pound dollar anytime soon, even if Brexit was to be postponed for another year. You know, that's ridiculous. You know, so that alone, the more you start pushing that stuff, I think we're looking for a lift in the pound.
Yeah, I agree, man. Because what Teddy's talking about, folks, the lowest, I just brought this pound back for 20 years, and the lowest it's been is in October of 2016 at 118, you know.
Yeah.
And guess what, folks? You're down from 211.
Right.
And that's probably, is that the Brexit kind of fall apart? Was that 2016? It might be. That'd be 3 years ago.
It probably is, yeah.
3 years.
That was probably the initial. That was the initial jolt,
The initial
right?
vote.
Yeah.
Vote. You know what it was? Because I remember it was ahead of our presidential election. Because after Trump got elected, said, "Hey, why didn't everybody wake up, man? You see what happened over Brexit, right? I mean, that's right.
Right.
Absolutely.
Yeah.
Wow. Absolutely. So, and we got deadline coming up in a few weeks. You know, October 31st. I mean, the summer's over, guys. Labor Day happened on, Halloween. I went to Costco. They got the costumes out. We know it's right.
Summer's over. That's right, man.
You're going to be Boris Johnson?
Yeah. That's a good one.
Get that disheveled hair.
Awesome,
get that hair. Get that hair ready.
Totally.
I was just going to say I have to work on the hairdo.
Yeah.
Just give it a nice...
I don't think anyone could get his hairdo.
That's all it takes.
I'll
Folks,
keep mine as long as I got some.
yes.
Right?
Teddy, thank you so much, man. Really appreciate it.
Thanks, Teddy.
Okay, have a great one. Have a safe one. Every trading day, folks, you can check them out. Forex-trading-unlock.com. Stay right there. Tommy and I come right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
It's amazing to think that Tom O'Brien started his weekly gold report 17 years ago with the first issue published April 7th, 2002, when gold was trading at under $300 per ounce. Gold peaked at more than $1,900 in 2011, and after spending many years consolidating at lower prices, gold may be poised for its next big run. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, South African Rand, as well as 25 different mining equities with specific buy-sell recommendations. As of April 1st of this year, the gold report currently has 8 active positions with an average unrealized profit of almost 8% for each open trade. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your gold report subscription today, visit the front page of TFNN.com. Don't let gold's next big run pass you by. Sign up today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Let's go to our man, John in Philly. What's happening, brother?
Hey, Tommy, Tom and Tommy, thanks for taking the call. In this last segment, as you wrap up, please share your thoughts, please, on this question. What are the odds that the S&P breaks this 2820 on the low side range to 2940 on the high side, breaks it, and runs back to highs?
my take is that that's not going to happen, but you know, that doesn't mean it won't. You know, I really like what you know, when I woke up this morning, man, I was so psyched that this market had bounced like that, because to me, you know, when you get a fast bounce like this in the type of market that we have, you know, this is a market that has gone down after come off that high in August, and it's having a tough time up here. So I like those bounces, man.
You don't have to be a technician to see that trading range we've been in since, you know, that escalation, right? And
right.
We're right near kind of the top of it there, but man, the bottom of it, whew, you're talking about,
right.
I mean, even the, you know, kind of a linear regression, you're looking at 28.25, you're talking about 100 S&P points, maybe below where we're at.
And you know what, John, I also like the time that we're in right now. So it's Wednesday, after Labor Day, window dressing's over. Okay, now the market's saying, what are you going to do for me now?
Okay.
Where are we going to make some money? And the Starbucks deal is a big deal, come out this morning, because the Starbucks is saying that, hey, everything that the tax break gave us, we took all that money, we bought all stock back, we gave dividends, but now we get nothing else.
We didn't invest it.
No.
You know, in capital.
Right.
So guess what? It's out. Now
it's
we're
out.
back to normal.
And they're saying that, okay, so next year is not going to be...
The growth ain't there that it was, right?
So...
They might not be the only one.
They're
right?
not. That's my point.
Exactly.
You know, we're going to hear that more. So
thanks for the call, John.
Cooking, man. Folks, stay right there. We got Fast Market coming up next, and we got our man, Mr. Basil Chapman, Steve Rhodes, Dave White. Be back this afternoon. Thanks, pal.
Thanks, man.
Look at him, folks.